Welcome back to the Brent Bruce Daily for Thursday, the 23rd, 2023. It is now 2:53 p.m. Central Time. The bond market is still open, and the mortgage-backed securities are moving in our direction today. It's good news so far for home loan interest rates in front of the big report that we've been talking about this week, which is the personal consumption expenditures report that is coming out tomorrow. Now, this report hopefully will be what we need to turn a little bit more from the run that we've been on. Unfortunately, interest rates over the past 3 weeks have gone up about a full percent, hitting that 6.875 on the Brent Bruce Daily, but coming down quickly, still drifting down a little bit today, but not where we really want to be. So what we're going to do is we're going to take a look and see what we need from the personal consumption expenditures report. So here we are in the Bureau of Economic Analysis, taking a look at the report that we received for December of 2022. Now, we get the report in January for the December reading. We're going to get the report tomorrow in February for the January reading. Now, we always want to pay attention to the personal consumption expenditures report excluding food and energy. Excluding food and energy is what's called the core reading, because the food and energy are so volatile, they like to take those out. And that is the Federal Reserve's favorite measure of inflation, core personal consumption expenditures report. So that is why this is such an important report that we pay attention to. So if we take a look where we are at, last month it was 0.3%. So month over month inflation on the personal consumption expenditures was 0.3%. That gave us an annual reading of 4.4%. So that tells you that according to the personal consumption expenditures report, products inflated by 4.4% over the previous 12 months. And that's where we take our little chart here by interactive report for the core personal consumption expenditures, and make sure you see right here that our core number that our target number that we're trying to get to is 2%. Currently, we are sitting at 4.5%. Okay. Now, if we come over here and we are going to now replace the January reading of 2022, okay, which currently is, I got to change this back here, is currently 0.5. So we want a report that comes in at less than 0.5. Now, the market's in general anticipating that the core reading is going to be at 0.4%, but we don't want to meet the market's expectation. That's what happened on the last couple of reports. The consumer price index and the producer price index kind of met the market's expectations. The Fed wants to see greater improvement than that. They want to see faster reduction in overall inflation numbers. So they want to see that 0.3, 0.2 on the month over month reading. We won't know until tomorrow. I believe the report comes out at 8:30 Eastern time. So let's go back to the little chart here and let's put in our expectation. So if we want 0.2%, the market is saying 0.4%. Let's say that we get a 0.3 reading. I think the markets would like that. I think home loan interest rates would improve if we get a 0.3 reading, even though I'd like to see a 0.2. The other thing that you want to know about tomorrow's report is that the personal consumption expenditures report does not lean so heavily on the housing component of inflation. So the consumer price index has a heavy weighting for the housing component, mortgages, house payments, rent, things like that. And that was by far the highest item. That is what was most impactful on our last month's consumer price index report, which was kind of a shock, and the markets didn't like that. Home loan interest rates went up. The personal consumption expenditures report doesn't use such a heavy weighting on housing. So if that's the case, it gives us reason to believe that our personal consumption expenditures report might be more favorable to us than our consumer price index report was. Let's take a look and see where the markets are and how they're feeling about things. Let's go over to our charts here. Okay, so right now we are up 27 basis points on our mortgage-backed security that we're following. The 10-year Treasury is down 5 basis points, but take a look over here. We have fought today, bounced around a little bit, went below this Fibonacci level, but have broken above the Fibonacci level at 99.711 and the second Fibonacci, which was 99.845, and maybe we'll even test this third ceiling of resistance at 100.094. Now, this is a really good indicator. Why are we seeing the markets moving in the direction that we want in front of the personal consumption expenditures report? That makes me believe that they think they're going to get a good report, that they're maybe getting whispers of what that number might look like, and maybe they're trying to get ahead of it. So hopefully that is an indicator that we're going to get a good report tomorrow. So how is this treating our home loans, our actual home loan interest rates? Let's go over here. Let's run a scenario on the Brent Bruce Daily that is current real time for our very well qualified 30-year fixed conventional buyer. And we'll take a look and see. Now, again, this is 25% down, 800 FICO score, primary residence, just an ideal customer. And we're sitting at 6.625% with a little bit of a credit of $389. Now, again, this is with no discount points and no origination points. If somebody wanted to pay a point, where would they be right now? Looks like they'd be about 6.25%. If they paid 1.7 points, they're getting back to that 5.99. I'd really like to be back to where we were 3 weeks ago when we were talking about 5.875 with no points. And we were, going even further if somebody was willing to pay 1 point. So let's take a look here just quickly at the parameters of this scenario that I just posted for compliance purposes. And again, making sure that everyone understands these are the real numbers. There are not any additional fees or anything like that that we're not putting out. Now, if you are appreciating this information, make sure that you do like, subscribe, and share, because that does help my channel. And also make sure that you stick around and get more updates as these reports come out. Now, I'm going to try to make sure that I get with you as soon as I get the report on the personal consumption expenditures reading tomorrow and see which direction we're starting to head. But also remember a couple of things that we've learned. Usually banks pull back at the end of the day because they are concerned with having some sort of a surprise report. So we may actually be able to see interest rates improve tomorrow because they were kind of holding back on improvement that they could have given us today. So we want to watch out for that. Also watch out for the knee-jerk reaction. So if for some reason the market moves one way or the other, quite violently, it may settle during the day as they digest and read through the report. So we're going to pay attention to that as well. Hopefully this report will help us to turn around and move in the right direction and get back to those high fives as soon as possible. I will keep you posted. Talk to you again soon.